Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 26, 2003. What I'm going to do in this video, I might be a little all over the place. I want to start out with the broad markets as I usually do. Time permitting, I might just touch on commodities. They do, I think at this point in time, deserve a whole separate update, probably in a video, because in videos I can cover a lot more securities and kind of go over all the little nuances. It's that would just take me forever to type up a post. I'm not a fast typist and I'm not a writer, so that's why I do a lot of these videos. But I understand that it is very convenient for a lot of you to have a static post that you can read at your leisure at work or wherever and look at charts real quick versus watch a video. So I really do try to balance between both those. All right, let's just dive in again. May go off on some tangents here, but starting with the broad markets, and this is really just an update. I got this out to you this morning. There's that what I call BOD or benefit of the doubt trend line. I really had two trend lines on QQQ that I think fit, and when you're looking at a security for a breakout above a resistance level, and you have two resistance levels in close proximity, well, you give it the benefit of the doubt. Wait for the last of the two to get broken out. Learned that long time ago. You take the breakout on the first one, the sellers, if half the sellers or more than half are looking to step in there instead of here, or the buyers are looking to buy that one. And then you not only have the BOD trend line, you have the beautiful 200-day moving averages again. You want to keep it, trading for dummies or trading 101 in a bear market. Short rallies into resistance, big resistance levels, especially primary downtrend lines in the 200-day moving averages, and then recognize when they're taken out, and not just QQQ, but really SPY and QQQ, those two together when they clearly take them out. And also, I say it often, it's not unusual to see them briefly pop it. The Qs, remember, throughout this bear market, this bear market's been all about tech. I mean, big tech, number one, has the highest weighting in there, and that in itself brought the market down. But big tech also happened to go down a lot more than other sectors. So as such, where I'm going is that you never even made it to the 200 simple that time. You got rejected on the simple there. You took out the exponential. I'm sorry, I'm talking fast. The red line is the 200-day exponential moving average, and the blue is the simple. But now you have them both coming in together. So, like I always say, subset of traders like to watch that they put on their charts the exponential. Some put the simple. That's why I put both, and you have them both coming in now. I don't know. I'm still, despite today's case I made, just short the pop at the open, looking, in pre-market, looking for a little more upside, and which was exactly where we got. I'll get to that in a second. I'm not. My convictions aren't as high. They're not nearly as high as the last time around when we hit, that 200-day in pre-market right there in QQQ. That was a very objective shorting up because we had not visited for a while at that point. This time around we hit it, and the buyers have been stepping in early, so it kind of, I'll call a spade a spade. I'll tell you when my confidence is high, I'll tell you it's high. When I tell you it's not so high, it was high this morning for a pullback trade, especially on the small caps. Right now, I'd put almost coin toss odds whether they're going to pop the 200 to clear out a lot of stops and suck in some more longs, or not. And if they do, I'd also put then equal odds at that, maybe slightly favorable odds that it would be a false breakout, aka whipsaw, and followed by a move back down below. But first things first. I mean, you don't want to, if they pop it, it's going to be pretty strong depending on how much you have. If you have a heavy short position and they pop it, you're probably going to see them take it, up for at least a few days above there, and quite a few percentage points, maybe 5, easily 3, probably 5% or more above. But again, first things first. I'm not sure, so there it is. Do what you want. I'm just in active trading mode, and that I should make very clear. And I've said it recently. This is kind of like December being a grindy month and a lot of whipsaws. We have kicked off peak earnings season here. We've had now Microsoft and Tesla out of the way. Next week on Thursday after the close, we have the big three remaining: Apple, Amazon, and Alphabet, and those are big companies, and they are going to set the tone for where we go from there. So where I'm going, that's why the trade ideas I gave you today, where are they? Right here. There it is. Short at on or around that 1257 level resistance there. Divergent high, just like that was the last short on that divergent high. And this one, I think, will probably bring us back, a little reaction there to the trend line. But uh, even if it broke before next Thursday or next Friday, that breakdown could stick. It would be a breakdown if even if we get there. Look, I'm getting way ahead of myself. We haven't even, well, we did reverse. We kissed my 12,057 level today, and we're right here. I'll zoom in for you, and then I'm going to measure it and tell you what we're looking at here. That distance is about what was that, 3%, right about 3%. If you shorted the pop into 12,057 today, and we make it all the way down to that trend line. But where I'm going is, if we do, well, remember, you've got the big three on deck, and market initially thought they liked what they heard with Microsoft. They sent the stock roaring up in after hours to make a perfect kiss of its 200 days, followed by rejection the following day. And Tesla, so far, it's up. I'll get to that in 1 second. So, anywho, those are that's the likely scenario. And where I was going is, if we broke down between now and Thursday before the close, then we're unlikely to just do this, because a lot of traders will go into a holding pattern wanting to see what Apple and Amazon and Alphabet report. Plus, a lot of traders don't want to take it's just foolish. I mean, there's always a degree of risk and uncertainty in trading, number one, but it's just like, if you're a recreational gambler, you go to Vegas, you do your drinks, you're playing games that you might not even realize the odds. Professional gamblers go to Vegas, and they only play the games that have the odds in their favor, and they know when to make their moves. And so it's a crapshoot is where I'm going, to position heavily long or short before those big three report. And so I think we'll see, continued game these moves, game 1, 2, 3% micro swings in the NQs and QQQ, and if you do that, successfully, you might make 10% overall. From between the trades yesterday, here, short down there, cover there, go long, and then today, if this one plays out. All right, so there's the divergence lines. I just, in this morning's little scenario, I had the arrows going up, showing figured they'd pop it at the open. And when you get close enough to a resistance level like that, it's usually like a magnet. You're going to hit it. And so that's NQ. And we go to QQQ and give you that. So that's the clean chart. And this is my busy chart. Same trend lines right there. And my what I labeled way back then. Off the last bottom right here, my what I call most likely bounce target zone, where we were most likely to bounce to, and we did. We hit it there, that gap up that morning in pre-market right to the 200. So we got about to the midpoint, and we're back to the bottom of it. So it's a case can be made to short here, anywhere up to but not above here. My plan back then, I told you as we headed up after going long off these lows, was to go ahead and start shorting for swing or trend positions at the bottom, scale in up to but not above the top. This is although that's most likely, this is still a potential bounce target zone in purple here. I should extend that out. But at which point I wouldn't be digging in. I always say this, that professional traders tend to average up on a winning position, not down on a losing position. It's retail traders that average down. Now, I will average down on a losing position if that was my predetermined plan, such as scaling. In other words, if I short the bottom and then we go up here and I short again and then I short again at the top, yeah, I'm scaling down, adding to a position I'm going down on. But that was my plan, because a bounce target zone means, I don't know, we can reverse anywhere from the bottom to the top is what I think is most likely. And then anything above that, it starts to show that I'm wrong. So I might hold those positions through this and then start to exit there, whether it's a hard exit or a scale out. With trend and swing positions, I tend to scale out, but at times I'll make a full pivot. It all depends on whether I have a hard buy level, support level, or hard sell level, or a zone. All right, enough on that. Yep. Oh, yeah, 60-minute chart. QQQ. Zoom in. It's getting a little busy, but there it is. This is that was the level I gave you this morning. Close enough. And remember, we hit it on the futures, and that gave us another divergent high. This was our last divergent high right here, this little wedge. We got that little sell signal there on the breakdown, pulled back, and we've now developed this uptrend line. So that's the bigger picture. This is probably the most, on the 60-minute chart, the most salient level. On the daily, it would be the downtrend line in 200s. You don't see them here because I'm on a 60-minute. And, they're in, so, close proximity. So we could go a little higher, and that's why you may want to give it room above there, that 295.35. There's a previous reaction high. And again, or you keep things relatively tight. If you're only, if you are in active trading mode and you're only going for a 3% pullback right now, then you might want to keep your stops relatively tight. Or you might be a swing trader or trend trader laying back into shorts or layering into longs. I made the case we could pop those 200 days. NASDAQ, the tech-heavy NASDAQ has been making the higher lows, and who knows, maybe we're going to make a run, another run higher. But as of now, negative divergence on the 60-minute chart at resistance. To me, that's pretty much all you need to, and coupled in near-term overbought in some securities. That's all you need to short. All right, IWM, covered that this morning, so I don't want to beat a dead horse, but that was really nice. This one I'm overweighted for short today. 1, 2, 3. Look at all these reactions here, and that 60-minute downtrend line here on the 60-minute chart. Again, that's what I got out to you today. So, hey, anything's possible, but you get a rally into resistance, overbought with negative divergence, close to a 10 on my scale, 1 to 10. So, somebody asked the other day, gave me feedback when I gave you convictions on a trade the other day on that pullback short or the reversal yesterday at the trend line. I told you I had a high conviction, and somebody said that helps. So when I do, and I try to convey this, you can usually hear my words when I'm like, meh, or if I'm like, yeah, this is to me a hard short. It may or may not play out, but you have both the 60-minute chart, you have a downtrend line resistance, price resistance, which also shows through on the daily chart, goes back all the way. That resistance level goes back to here when the bear market started. Look, reaction low, reaction low. You danced around it there. One day where you tried to break out, or the and IWM tried to, got smacked down by the bears. They tried again, smacked down. They did pop it here, I'll give it that, but then they back tested it and you had a bounce. It's just there's enough reactions, and most important are the most recent reactions. I always put a higher weight onto recent reactions more so than previous, but that's it. So there's your uptrend line. That would be a max target. There's your primary downtrend line, bear market downtrend line. So this is the potential for IWM right here. You take the downtrend line, which we just broke out of, and I'll acknowledge that, and face value unless that fails, that's bullish. For the small caps, you have an uptrend line that gives you a little triangle pattern there, and so a pullback target. I had the arrows showing you a pullback to 182.82. It's a level I've had on here for a while. That's the first support. I could easily see a little bit more, maybe a back test of the primary trend line or the uptrend line. They'll come in together. The apex is right here. So, again, earnings week, peak earnings week, even though those big tech companies aren't in here, these are small caps, they're going to, work like that. So you might bounce like that and then work our way down. That's just a scenario. But as of now, we're just looking at that. And if we get that, that is, and again, if you're in active trading mode, that's also about a 3% pullback there for IWM. And I also gave it to you for your futures traders, RTY. Got it here somewhere. Give me 1 second. I have too many charts below. There it is. RTY. I give you a 60-minute chart. That's what we're looking at here. 1, 2, 3, 4, 5, 6 recent reactions. Go back more, and there's more back previous. This is only 3 months, and there it is. So rally overbought, rally into resistance with negative divergence. Again, I mean, there it is. You already gained the minimum. That's the first pullback target, was a back test of this trend line, and so I got that one out to you as quick as I could, and that was good for, I don't know, 1.5% or so. And you can see the levels here. So that's the first price support's a little bit below the trend line at about 1888. And then 1864, and this is where I think the small caps will go. That's pretty formidable resistance. I think we'll come on back to this trend line here. And if and when we, depending on if and when we hit that, you're talking a move of about, let's say, yeah, what I said before, about 3%. Okay, so that's that. And then kind of regroup, maybe game a long bounce, depends if and when that's hit and how the charts look at the time and where are we at in relation to Apple and Amazon and Alphabet earnings. Okay, 15 minutes into it. I'm watching the clock here so it doesn't go super long. Let's just cover a few of the fangs. Oh, before we get into that, let's cover the my whole theory on the bear market is for the rest of us, meaning the bear market for the stocks that never got the memo to begin with. I'm going to rifle very quickly through the Dow because that's where I was focused on. Dow kind of being a little mini index of the S&P, same kind of diversification, but only 30 stocks. I can go through them all. Apple, made it very clear that I favored big tech and thought big tech would get a rally, and Apple being one of my favorites. And that one certainly rallied. It's taken out the uptrend line, but you can draw this uptrend line. You can draw it like that, come in, capture this candle, these two candles, and you're pretty much right on it if you hit the high of that candle. And so really that's the BOD line, and getting pretty extended, not overbought yet, but 60-minute chart. This is where I gave you bounce targets and all that. And that was the downtrend line I had on the 60. So you're above it, and I'll give it that. You are above it, not by a very comfortable margin, but above it. So give Apple credit where it's due. We've burned through the divergence. Starting to diverge. We have small divergence here on the 60, I should say right now, between this peak and this. That divergence is taken out. Microsoft. Microsoft's, had the, all over the place after earnings and put in that divergent high. That was the catalyst, and the trend line break right here, the catalyst for that correction. Told you yesterday, one of many reasons to cover shorts and go long. At the lows yesterday was Microsoft at that nice 231.36 support. That was good for a bounce right back into where it was, right back into resistance, that 6% bounce. And it is at very good resistance, hence the reason for shorting the pop-up this morning. That's it. Wash, rinse, repeat. And with earnings, earnings season here, this is probably what we're going to get. So hopefully that message has been conveyed. There are times, and I know a lot of you don't have the skill sets or the time or the inclination to actively trade, and that's fine. Don't do what you can't do with you need a full commitment and hyper focus for that. My advice to those part-time traders, longer-term traders or investors is just wait till earnings are out of the way, unless you're a risk taker. You want to lay your bets, which way you think this market's going. You can do that, but no reason to do a full hard bet. I would wait till the other guys are out of the way, or till we have better visibility on the charts. So anyways, this is wash, rinse, repeat mode right now. Long, short, et cetera, et cetera. All right, I have to go through the rest. There's a lot of stocks in the Dow. We're going to go through 30. Visa, time is coming. Bearish rising wedge. No sell signal yet. Needs to break this trend line. When it does, we'll have a sell signal on Visa. UNH already broke down. This is one of the for rest of us stocks. Recently at an all-time high. Didn't get the memo there was a bear market. But as I said, and this isn't rocket science. This is how it works on Wall Street. Fund managers do sector rotation. After a while, they say, look, UNH is getting a little richly valued. It's up there, and I said in a bear market, they're going to go after and look after those stocks that aren't way down. You're going to buy Amazon, as I did and we did, or hopefully some of you did, because it was down 50-something% off the highs, and that's one of the bluest of blue chip stocks out there. And then so what the fund managers will do, they'll take profits on UNH, and of course the technicals first and foremost. I would never say, all right, UNH is up, so let's short it. No, I was waiting forever and a day to see this trend line break, and the divergences that we're building said it would likely break. We had a divergent high there. It's not as if they don't work. You got a nice correction there. But then bigger divergent high, trend line break, another correction back to the trend line, divergent high, correction back to the trend line, divergent high, and then boom, finally, boom, bing, 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 there's your sell signal. And we hit my 488.82 target. It's been dancing on it, consolidating after a little bounce back to the 507 level. 200 days are overhead, turning down. So once the stock after this period of consolidation. I mean, it could make a run. Anything's possible, of course, but I don't think this is weak. And, I always say stocks, a reaction is either a bounce when you fall down to support, or a consolidation. The consolidation's a weaker of the two. It shows the buyers just aren't stepping in. So once they, some want to buy UNH that don't look at technicals, and then once that's over with, then the stock will head on down here to 448, and then have another reaction, so forth and so on. Next up, J&J, Johnson & Johnson. Another one, like I said, healthcare sector is one of the sectors that hadn't gotten the memo until recently, and it has. And of course, you need the breakdowns. There's your sell signal, and that one's been moving lower since. Nothing else to add. JP Morgan, already on a sell signal, but it's back testing. You had a rising wedge right here. Bearish rising wedge, that is a breakdown. We've been back testing plus price resistance. This one is an objective short entry here. No guarantee it'll play out, but you have a breakdown, a back test, and price resistance just overhead at about 140, 112. Or you can wait to see a big red candle that means you've got a rejection. Because the problem with back tests, you can back test for a while, you can even regain the wedge. But I think it's an objective, maybe a half position here and another half once you see a big red candle to confirm a rejection. And there's your next target, 127.03. Actually, I'll just leave. I'm going to move it up a little. I'm going to call it 129 right now, and then I'll update that later if it plays out. WMT, Walmart needs to break that trend line. Already broke its primary bull market uptrend line right here on the daily chart. Broke down, back test 1, back test 2, rejection. Now has this little wedge pattern underneath there. Break of that's going to send the stock down here, 117.21, and then ultimately 103.43. CVX, same thing, needs to take out the primary uptrend line, and the divergent high tells me that it will likely do so sooner than later, but it needs to take the minor trend line out first. This is the minor trend line right here. Set a sell signal for that, and there's some price support there, 177.68. That breaks, it's going to shoot down to 167.09 and or the trend line because they come in together, or 167 we'll call it. And then once that trend line breaks, good night, big oil. PG, Procter & Gamble, got the memo finally, one of the blue chips, and holding up the S&P and the Dow, put in a divergent high, and it's clearly rolled over, hit my 138.60 support / target recently, bounced off there. No opinion right now in the near-term direction, but it's getting the memo and making, you can see making lower highs so far and lower lows. That is a downtrend for you right there, textbook downtrend. And so as long as it, doesn't take out this previous high, and of course that one, the trend says we'll likely work our way down, and as the bear market gets underway. HD, Home Depot, broke down there at support, needs to break 310 to get the next sell signal. Merck, this one broke down today. There's a sell signal I highlighted. This is one of the strongest ones in the big pharma sector, but a clearly bearish chart. So this is where momentum buyers get smoked. They're buying the strongest stocks because they think that's where to be right now in a bear market. And I said, nope, I'll go the way around. You want to buy, at this point in a year plus into the bear market, recently at least, you want to be buying Amazon, Tesla, Meta, and those names that had the snot kicked out of them, not these stocks that are trading at all-time highs. And so there's your sell signal today, break of 108.73, big red candle. And until and unless that 108, we'll call it 109, is recovered, that opens the door for I can give you, there's going to be a stop along the way here somewhere, and then maybe at the bottom of that range, but ultimately I would just swing it down here to that target I had at 95 and a quarter, cover a little bit above that. KO, got the memo, one of the strong ones, not far off its all-time highs just recently, but then broke a trend line and has been stair-stepping lower. Again, money moving out of defensive issue and in non-tech names into tech recently, and whether that trend continues or not, well, we'll know after next Friday, hopefully. Nike, this is one of the beat down names, so it's rallied, and I have no opinion on this one. I wouldn't take it long or short. McDonald's, not too far off all-time highs, and broke the trend line recently. Just not my kind of chart, but I do think it'll work its way back here to 230. And when the bear market, the next big leg down in the bear market comes, this one will be breaking 230 and heading down here to 205. Until then, better fish to fry, in my opinion. Cisco, like all big tech, one of the stronger names lately. Downtrend line right there. If it can pop this, great. That's bullish near term. There's certainly plenty of resistance overhead. So that one. Disney, this was one of the trade ideas I gave you back here inside the wedge, and it's up. I'm trying to remember where exactly I pointed it out, but even from the breakout of the bullish falling wedge pattern, we're up. This thing's gone almost straight up. That's 18%. So there's a growth and income trade idea. Or at least a growth, swing trade idea. But look, I gave you a couple targets here, and we're coming right up to that 109.85, and we are very overbought. I would say hard sell. If you took this one, I did, but I got out here. If you're in it, I would certainly consider at the very minimum raising stops right now to protect profits. I would sell if I had it right here. We're right at that 108.95. That's pretty good resistance. And like I said, last time where this overbought was right here, and you can see what happened to the stock then. And it also had a comparable, similar uptrend line once the uptrend line cracked. So, you can, if you want to hold it, and you like Disney, you think you got it at a good price, you can try, use the stop below that trend line, but why not just take on profits and move on to the next one? VZ, Verizon, no thoughts there. CRM, this was a trade idea I threw out for you. Was triggered on a break above the BOD, well, the downtrend line, and then this little consolidation area. So that was a buy signal. It's working its way up. Just ran into the 200-day simple. We're up from entry to today's high. It was about 8% so far, but we're still shy of my first target there. HON, Honeywell, that's what that looks like. No big opinion there. Amgen. Oh, this is pretty good. Again, this is where healthcare, I told, that's the next one that would probably go after. And boom, this is another big biotech company right here. I did that line. Look how good this 1, 2, 3, 4, 5. That was a false breakout followed by a hard rejection to close back below. That even very helps to validate that. So was that 6, 7? I mean, look at that. Look how many levels. And then when you finally broke out, you made a perfect textbook back test. This is a 10, this line right here on a scale 1 to 10. Doesn't get any better than that. And so then that means this whole thing now was a big old bull trap, aka false breakout, unless it could get support here. I mean, silver did that to us the other day, and I suspected it might cut the bottom of a trading range support, but then rallied to close the day right back above it. So, but take it on face value. Actually, the breakdown occurred yesterday when I zoom in. Today's follow through. So I'll take it on face value because this is a sector I expected to roll over. I expected money coming out of healthcare going into tech lately, and that's what's happening. And that should open the door for a move down to that first target there, about 244.66. I don't own this one. I'm not short. I should say you don't own a stock you're short on, but I have no position, but I just moved that line down to 243 for you, for those of you that want to trade that one. Caterpillar. Fix that line. Breakdown back test. Big old bearish rising wedge pattern here on the daily chart. Broke down, hit that first support. That's why I didn't have T1. That's really S1 first support, 245.95. So call that 246. And you can see we've been back testing since. So we just need, you can probably see this line better on a 60-minute chart. Little wedge there, break of that trend line. Will validate, give us a rejection from the back test. Going down, we'll probably slice right through the 246 level and go to hit my first target. And I strongly maintain that even the second target, that's my preferred target right now, T2. There's a 60-minute chart. So just go like that, wait for a break of that. PPO is about to make a bearish crossover. That'll help confirm. Last time we had a bearish crossover, the PPO was right there, right there. So boom, ready to go. All right, next up, IBM. This is tech, but boom, this is a Dow component. Oh, and this is one of the ones that didn't get the memo. Again, this one was just coming off all-time highs right here recently, right? pretty much a double top high. Look, you come down to that previous high back in 2021, tested it again, rejection, massive failure at a double top high, previous high, sold it hard, rallied back up, took out this trend line, sell signal, another sell signal, and then boom. So this is, again, this is the market snipers coming out looking for, out hunting for the, the names that hadn't been beat down 50%, the ones that are trading or were trading at all-time highs, and that's what's now getting it's just the phases of a bear market, and this one's a lot different. I predicted that early on. It would be a lot different from previous ones, and these are things we watched. So Boeing, one of the better looking shorts in my opinion, bearish rising wedge, breakdown and back test, boom, just like Caterpillar, and strong and right back to resistance there. Breakdown point, I have resistance about 214. Be very clear, this is an objective short entry right here at the trend line, and you can maybe do a starter position if you don't have one, wait for a rejection candle to add to it, and T3 is what I'm maintaining as my preferred and final target right now, and that's that would give you on Boeing a short of can't grab the exact line or it moves about 19%. Intel, Intel's been beat down, used to be the king of the semis and lost that title a while ago, but this one's, this, I have to say, that's a fairly constructive looking chart. We came off that divergent low. It's been pushing against that $30 level. If it can pop it, it's going to run up there to the 200 days and the 33.32. So watch that one. That's a, again, hasn't broken out. Resistance is resistance until it's taken out, but it looks constructive. So there's a trade idea for you on the long side. GS, Goldman Sachs, needs to break 339 and then should head down here, and it's been stair-stepping lower since 1, 2, 3 lower lows and or lower highs, lower lows ever since it put in this divergent high right here. AXP, American Express, this one's a big old symmetrical triangle pattern. There's a downtrend line. It's at price resistance now. If it pops a price resistance, it'll probably get rejected on the trend line. But the bigger picture says a break of the triangle to the upside is bullish and a break to the downside is bearish. MMM, 3M.